final episode of the boom and crash liquidity concept, and we'll be addressing consolidation, loss, liquidity, right? And I hope you're having a great time watching all those videos. If you haven't watched episode 1, 2, 3, 4, 5, 6, make sure you go on back onto our channel and look at what we have, look at what we talked about in the previous videos, right? So this is gonna be the last of 7 of the boom and crash liquidity concept. But when we talk about consolidation lows, what exactly are we talking about? You need to understand that there resides liquidity below consolidation lows, right? And then price consolidates to gather orders, and these orders can be buy, sell limits, buy stops or sell stops, right? And consolidation, it involves price staying in one range, right? And they fail to break that range. And then you need to learn to recognize when this happens, because it's going to save you a lot of time and money. Let's look at the first chart, which is the crash 300, right? We're going to look at the first example. It's 3 examples actually, so we're going to look at those 3 examples, and we are going to identify liquidity on the downside. This is the first 30 minutes chart. So what price did here was, we had this old high, and then we had price drop into the downside, and then they formed this low, right? Then they went up, then eventually they started consolidating. They formed this range high, and they formed this range low, and they kept consolidating on over the same range. But as they were consolidating like this, we had this last down close candle, which was our bullish order block, right? So what we want to see is they formed this liquidity down here. Are they going to drop down into this bullish order block and then target this relatively equal highs or this old high up here? So let's see what happens. That's what they did. They dropped to the downside and they went up eventually until they took out our old high with this movement here, right? So that's one way of identifying consolidation lows. So let's jump into example 2. So for our second example, right, we had price dropping, then they went up into this fair value gap up here, then they dropped, broke market structure here, then went up, right? So when they went up, we had this last up close candle which acted as our bearish order block. The same bearish order block, right, was used by this consolidation ranges high, right, was used to form the high of this consolidation that we just identified here. Then we had price going up one last time into this bearish order block. Then we had them going down and then coming back, right? And then I managed to identify another bearish order block here. But what I wanted to see was, will this push price to the downside to take out this consolidation lows liquidity, right? And let's see what happens. That's exactly what happened. We had price dropping to the downside to reach into our consolidation lows liquidity. So that's one way of looking at it. This is the crash 300 third chart, right? We had them dropping for some time and then coming back up, and then they started moving sideways without breaking any new highs or lows, right? So what we want to see is when that happens, our eyes tend to the low side of this consolidation. Then we want to see if they're going to reach into this lows, also reach into this old low down here. That's what price did. We had price dropping and then reaching into our lows, right? And then with such a velocity and with such movement and displacement, so we saw them moving to the downside to reach into that old low, which acts as our old lows liquidity. Remember, we covered those in episode 2 of the series, so check it out. I'll link the link to the video on the top right. Look on your top right, then you'll find the video link there. So that's what happened with crash 300. Now let's jump into crash 500. This is our first example. So we had price dropping to the downside. We had crash 500 dropping to the downside. Then when they dropped, they formed this fair value gap up here. This fair value gap was used to keep price in range because price later came back to it. Then they started moving sideways. What happened now was we identified the range. We looked at this low and then this high. Then we wanted to see if price is gonna break this lows and then drop to the downside, right? Because remember, we utilized the fair value gap high as our resistance point, price action point. And if you want to learn more about fair value gaps, just make sure to check episode 2 of the boom and crash capitalizer, BCC. So I'll link the video on the top right. Just check it out, okay? So price then dropped, and dropping, they reached into our liquidity down here. So that's what happened here. Then we don't care about the rest of the price action, but what we wanted to see was it gonna reach into these lows? Now let's look at the second example of the crash 500. So we had price going up, right? We had them going up here, and as they went up, they left a void here, which is called the liquidity void. So the liquidity void is a place where is an area where price hasn't returned to, right? It's a one-sided displacement type of movement, right? So what price does is it tends to come back, or it tends to return to fill up that liquidity void after some time. So that's what we want to see. And when that happens, obviously we need to identify our consolidation. And I had to identify this low and this high. So that's our range, high and low. So what happened was price had to rest for some time in this range, but eventually it's gonna have to reach into this consolidation loss and then attempt filling this liquidity void. So that's what happened here. We had price dropping to take out the lows and then filling this liquidity void on the left, and we had this old low also, which price later visited after filling up this liquidity void. what you have to understand is the moment price starts going, it doesn't matter if the candles are small or not. As long as price is going on sideways, then we consider that a consolidation, right? So we had to identify this high here and then this low here. So we had price then consolidating on that same area for some time now, which now led us to identify our consolidation lows. Also, we had this old low here, right? So from the fourth at this was 12, 14, around 1430. And then we had price going up and then consolidating for some time. So eventually price did go down to reach into our 1430 low here, as well as our consolidation lows liquidity. Now let's jump into crash 1000 chart. So for crash, this is our first example. We had price going down right on this day. This was the second, and the time was 6 o'clock, right? There's a 6 o'clock as we identify the range low. So this was our range low. And then this was the six. So this is 6 in the morning, and then this is 6 in the afternoon, 1800 hours, where we identified our range high. Then we had price ranging within that range. And as it was ranging in that range, I managed to identify this high low fair value gap. And we had price reaching into that fair value gap for some time here. They reached the high. Also, they came and found resistance on the low again, then the last time here. So let's see if this fair value gap will be able to push price down into our consolidation lows liquidity. That's what they did here, right? So with this movement here, it pushed price down and reached into that. Also, we had price going back up again into that fair value gap, but this time around they utilized this last up close candle as a means of resistance and drop price to the downside. Another example. So we had them dropping, but we got stuck in this range. We had this high here, this low down here, right? And in that range, we also had this fair value gap where price tested it many times. It's low, it's high. Also, we had them testing them for the last time and then dropping to from the range low. And I identified this propulsion block up here. Basically, a propulsion block is a candle that's tested an order block, right? But now it's no longer an order block. It can be, it does look like an order block, but this time around it's a propulsion block. So I've talked about that on the last episode, not the last, but on the series Boom and Crash Capitalizer on episode 2. So check it out to know more about what a propulsion block is all about. So we had them dropping and then coming back up into this propulsion block. So then it pushed price down to take out our consolidation lows liquidity, right? So that's what happened. Okay, now we have the last example of the Crash 1000 chart. So we had price here dropping, right? We had price dropping for some time, then it went up. As it was going up, they were going sideways, but we managed to identify our range, this low, this high, right? So that's what kept price in this range. And then what we want to see is, will they reach into this consolidation lows liquidity, also this old low liquidity, and maybe try to fill up this fair value gap once more, because earlier they had visited it and then dropped. That's what happened. We saw them reaching into this consolidation lows, liquidity going up and then dropping more, furthermore into this old low, then spike to the upside to fill up this fair value gap from this candle here with this movement once, twice, 3 times, right, until they eventually filled it. So that's what happened. $300 chart. So we have price consolidating in this range. We have this up, this high on the upside, then this low on the downside. Then we had price stuck on this range, right? So we then identified consolidation loss liquidity, right? So let's see how price performs. We had price dropping to take out this consolidation low liquidity, but as it did that, I had this bullish order block here. So we had price going up and then returning to the order block and then spiking to the upside to take out also this consolidation highest liquidity, right? If you haven't watched the episode where we talk about consolidation highest liquidity, check out episode 6 of the series, right? So check it out and then find out how you can trade it. So they did take out both sides of the consolidation, right? So that can happen. An example of the boom 300 chart. So we had them consolidating, and this is one of those periods where you can lose a lot of money, you can make a lot of losses trying to fight the trend, but it's not even trending. You'll think that it's gonna go up, but you find out that it's not going anywhere. You buy, it sells, you sell, they buy. So you'll realize that on this day they lasted since the 21st here up to the end of the 23rd, right? So what we want to see was we wanted to see if they're going to break this consolidation lows and maybe reach into this old low here, right? So that's what happened here. We had them dropping to the downside and took out this consolidation loss liquidity and then reached into this old low also, right? So that's one way of looking at it. Okay, so now let's look at boom 300, last example. We had them spike into the upside and then dropping, but upon them dropping, we had this consolidation here that I had identified. Of course, I utilized this old low and then this old high. I just wanted to demonstrate this consolidation that had occurred. And then they formed this propulsion block, bearish propulsion block up here, right? So I wanted to disregard this here, but of course they did reach into that. But I wanted a deeper reach into this liquidity. So that's what happened. They did return into this propulsion block and dropped massively into the downside until they eventually reached this old lows here with this candle lows over here, right? So that's what happened. Now let's jump into boom 500, our first example. So over here we had price consolidating. After this drop, we had them consolidating on this range. We had this range high, range low. Then we had consolidation loss liquidity down here. Then upon identified the range, I also identified this fair value gap down here. So I want to see how this is going to impact price, right? So what happened was price did reach into the fair value gap high after taking out this consolidation lows liquidity, and then eventually spiked to the upside and reached into this bearish order block up here and then dropped, came back into this propulsion block. Remember the candle that reached into the bearish order block We now look into it for later retracements, and we call it the bearish propulsion, right? Then it dropped to the downside. So now we have this example here. This is a funny example, but it's educative. So we had identified this low here as our range low. Then we identified this high up here as our range high, right? But also we had identified that this is a consolidation loss liquidity, but it's on top of a bullish order block for the 30 minutes, right? So what we want to see is, are they going to reach into this our consolidation lows liquidity to try to reach into it, also find support over our bullish order block? That's what they did here. They drove price down and then took out the consolidation lows liquidity, also found support on this bullish order block and pushed price to the upside till they reached into the consolidation highs liquidity for the boom 500. So we had them consolidating here for a long time here. Consolidation high, consolidation high, range high, low, and then consolidation range high. Also, we had this propulsion block, right? Similar example to the one we looked at before. So we also have a bullish order block here on the downside. So what happened was price did utilize this propulsion block here to drop price into the consolidation lows liquidity and reach into our M30 bullish order block, right? So we price returned for the second time into our propulsion block from the 30 minutes and dropped price lower. So this is how you'd identify liquidity on boom 500. So last but not least, we're gonna jump into boom 1000. Now our first boom 1000 example. We had price going spike into the upside, then they're consolidating for some time. Then as they were consolidating, they formed this consolidation loss liquidity. Also below the consolidation, we had this bullish order block, right? What price did is they utilized this bearish order block here to keep price consolidating here, then eventually drop price to the downside into this bullish order block, which later spiked to the upside and continued going to the upside. Our second example for the boom 1000, we had price spiking, and when they spiked, they left this fair value gap up here. Then we had a ranging motion where we had this low as our range low, and then this high as our range high. Then we had this liquidity down here. So what price did was, using the fair value gap, right? They dove deeper into the fair value gap, but didn't completely fill it. But they achieved our goal of reaching into our consolidation loss liquidity. That's what happened here. Then they spiked to the upside, right? So this was a good trade, or this was a good pattern identification, or this was a way price reached beautifully into our consolidation liquidity. Okay, now let's jump into the last example for the boom 1000. So we had price dropping, right? Then we had them spiking a little bit to the upside. Then they started consolidating. We identified our range. And then we had this consolidation loss liquidity. So what we want to see was whether they're going to reach into the liquidity, also reach into our old low, which acted as liquidity. That's what price did here. They dropped to the downside and hit our targets down here. So that'll be all for the examples. There's more. Just go into your chart, try to identify these examples, and hit me up on social media at Capital Trading, at Capital Tradings, or Capital Trader 23 on X, formerly known as Twitter, right? So share those examples even on the comment section on YouTube. Capital Tradings, at Capital Tradings. Continue sharing your experience with us, sharing your experience on this series. Okay, let's continue on to the next section of the day. Okay, so now I want us to talk. What I'm going to talk about is how to really successfully trade these concepts. It's not easy mastering all these concepts that we teach on this channel, and you can never always use all of them at the same time when you are trading. So you need to find environment that are suitable to trade some of these instruments that we teach on this channel. Remember, sometimes you don't need a fair value gap, you only need an order block, and when you identify one, you can utilize that as a trade idea. But on this series, what I tried to do was I was addressing liquidity, and liquidity is what drives price. I don't know how it's engineered, but from studying previous chart patterns or history, I realized that price will always reach out for old highs, old lows. Price will always reach out for trend line liquidity. Price will always reach out for consolidation highs and lows, right, on a consistent basis. And being smart about this will allow you to have an upper hand in addressing or tending to this kind of market environment. So I want to thank you for the time that you took to watch our episodes, and ensure that you've watched episode 1, 2, 3, 4, 5, 6 of this series. Also, ensure that you jump into BCC, Boom and Crash Capitalizer, because that is the one of those series where you will never regret watching those videos, because what we did is we put our all in there. Okay, we did pour our all, and that's not it. That's not it, all of it. We still have more in store, right? So next year we'll be trading all these concepts live on this channel, so that we'll be proving that they work, right? So the content that will be dropping 2024 is gonna be us trading live, or just demonstrating the money that we made, the profits that we made from utilizing this concept. So that's our main goal for 2024, right? So I don't know, maybe we might drop new videos, but I don't think we'll be dropping new videos and that are related to lessons of teaching you how to do this. But it'll be just us proving that BCC works, BCLC works, and that's what we'll be doing of the entire 2024. And then I want you to know this concepts work on every trading instrument, whether it's forex or it's synthetics, right? So I think we'll be starting to talk about forex in the year 2026, where we'll be demonstrating this concept on forex pairs, right? But for now, we'll just be focused on the boom and crash liquidity. Oh, sorry, boom and crash synthetics, right? Because they have a clean price action and they move fast, and they, right? So that's why we decided to focus on synthetics, because synthetics are good for beginners, because it's clean price action, or it's clear price action. So that's why we decided to focus on those. Okay, so that should be all. Continue working hard. Make sure that you backtest, review, and study price action behaviors. So, thank you for watching. See you next year when we'll be dropping new videos.